fundamentally, I think, first of all, the UK remains an attractive place to invest, mainly because of the law, property law in particular, is strong. I think, secondly, the weak pound, I think, has been a stimulus, I think, post-Brexit, and that has certainly encouraged further investment. We've seen, I think, particularly some Chinese investors actually coming back in to the market that perhaps had gone away for some time as well.
I think we've already seen that, there remains a confidence in the market. I think, London remains a capital city, it remains an international city.
I think our view is, from a real estate perspective, real estate investment perspective, we're going to have lower interest rates for longer as a result of Brexit, so that's a solid positive. You're not relying on capital value movements, and if you can buy a reasonable enough income spread from your cost of debt to the income that you're receiving, then you can de-risk yourself relatively quickly.
To some extent, we are happy with the Trump presidency, only because hopefully he will put regulators in place who are, at least we view, as more likely to take a more sort of sensible look at what regulations and legislation has been put in place and whether it makes sense.
We deal mainly in the trade counter sector. I mean, that's our niche, if you like. And those guys are saying, yeah, Brexit's going to have an effect, but the business will still there. We'll still be making a profit. Perhaps it's even an opportunity if other people are being nervous for us to get in and make some good deals.
There's huge amounts of positives in terms of, as I say, London is a global city. It will continue to do that. Really, we should see this as an opportunity to do trade deals with the US, how we interlink with India, for example. Theresa May's just been out there. And we need to make sure that we are seen as being outward facing, that Brexit isn't seen as something that is London turning its back on the world, or the UK turning its back on the world, I should say. And how we get London and the regions to really become the driving force of the new world order.
For many, many years now, the 10-year Treasury was below 2%, and now we're seeing something heading towards 3%. So from that perspective, I think you'll actually see a lot of loans get refinanced in a very short period of time here, within the next 0 to 12 months, and that's somewhat of a positive.
I don't really feel that the market in Birmingham, as it sits right now, has suffered off the back of the Brexit referendum. Slightly more uncertain times ahead, and next year will be an interesting year, but right now it's very, very strong.
In the meantime, demand's holding up relatively well, rents are holding up relatively well across the regional markets.
Everyone's very confident that HS2 will receive royal assent, and thereafter there are already a number of organisations queuing up in the pipeline to start looking at space, and I think there's a long way to go on that, and I think there could be some really good news coming through for Birmingham.
We've changed massively as a city over recent years. The delivery of the infrastructure projects that have happened recently with the library and the new New Street station, and the anticipated High Speed 2 and clearly the tram.
We're seeing deals. So in Q3 we saw nearly £9 billion worth of deals. We saw local authorities invest around £700 million in Q3 alone, over £1 billion this year to date. That's a record.